Our next conversation is about compliance, and we have compliance experts with us here to talk about what it's like to be in the seat, having to read the tea leaves and interpret all of these speeches and statements and put it into practice in the crypto industry. I'm going to let each of you gentlemen introduce yourselves. Who are you? Who are you with, and what's your role? Paul, we'll start with you.
Thanks, Perianne. Good morning, everyone. My name is Paul Grewal. I am the Chief Legal Officer at Coinbase, where I oversee our legal function, but also compliance, enterprise risk management, investigations, and policy. It's great to be with you all.
Choices. I'll say choices. Good morning. My name is Ben Melnicki. Thanks for having us here at Solidus and CryptoCompare. Looking forward to the discussion. I am a regulatory attorney and compliance officer. Started my career in traditional finance at places like Bank of America, Cantor Fitzgerald, and then later took the plunge into the crypto space. I've been at some stops such as blockchain.com, Ripple, and most recently Grayscale. Looking forward to the discussion.
Hi, everyone. Thank you for having me. My name is Eugene Ferrara. I am the Chief Compliance Officer at GSR, a liquidity provider and market maker founded in 2013. I just joined the crypto space in June, so be nice. I've spent the last 15 years in traditional finance in a number of different control capacities.
Hi, I'm Ram Ahluwalia. I lead the digital assets or crypto business at Crossriver. Crossriver is a digital infrastructure bank. We're a B2B2C bank, and we power leading crypto players, including Coinbase. Actually, Crossriver was the first bank in the US to give Coinbase access to fiat ramps. So if you wire money, ACH funds into Coinbase, you'll see a pop-up screen referencing Crossriver. We also power eToro, Sardine AI, MoonPay, and others. We're an infrastructure bank that enables fintech lenders and crypto companies to engage in banking, payments, and lending services.
So between Coinbase as really one of the earliest native crypto trading platforms, Ben, who has experience across the entire digital asset ecosystem, GSR focused on more trading side, and then Crossriver from the Prudential bank perspective. If you guys could talk a little bit about your unique company's ethos to risk and compliance, and how you're leveraging compliance as a part of the overall strategy of the business as a whole, and how that feeds into the ethos of your company. And Paul, we'll start with you, and then we'll do GSR and then Crossriver.
Sure. So, at Coinbase, we tend to think about risk comprehensively, and importantly, compliance as one element of our risk management strategy, but not the only element, right? We have market risks and credit risks and operational risks that are also an important set of criteria and considerations for us as we build out our overall go-to-market plans. Focusing on compliance in particular, though, I think it's important to understand that from our perspective, looking at issues regarding KYC and enhanced due diligence reviews and all the things that we, at least many of us in this room, are quite familiar with, it's easy, I think, to lapse, Perianne, into a conversation that's rather binary. Do we have a low-risk strategy? Do we have a high-risk strategy? Why are you adopting a high-risk strategy given the limitations that you may face? I very much believe in an intelligent risk strategy that looks at an appropriate set of trade-offs and is really focused on what is the right balance to strike between what I think are legitimate considerations and concerns that we've heard about even this morning from some of our senior regulators, and obviously wanting to bring crypto to the masses and to more people. I think one important element of intelligent risk-taking that we try to focus on at Coinbase is to understand what the fundamental purpose of the restriction or requirements that we're dealing with is really intended to address. I think you heard from Brian and Chris and Kathy just a moment ago about this notion of addressing the underlying concerns that are addressed by a particular rule or regulation that we may be dealing with, as opposed to somewhat robotically trying to fit a particular program or process or approach into a pre-existing box. So that's one element of intelligent risk-taking that's critical for us. Another important element is transparency and disclosure. And that, of course, involves a certain focus on our customers and our users. It also means transparency and disclosure to our regulators. You know, I am a big believer in working in a productive fashion and meeting and talking about how we're thinking about risk taking with our regulators, and we do this on a very regular basis. I will say that it has not always been the case that we are met with a similar level of enthusiasm for conversation, as opposed to, you know, a monologue when we're meeting with our various regulatory stakeholders. But that's okay. I think in the end, we are all better served by coming in proactively and describing how we're thinking about our approach to new AML requirements or sanction screening or whatever the case may be. And in that way, at the very least, educating our regulators about the different options that the market presents for addressing the fundamental risks that they're concerned about. If we at least achieve that much, I think we've done some good.
Yeah, so from a GSR perspective, we really focus on market conduct risks and sales practices, because clearly we're a principal trading business, and a lot of what we do is facing off against venues and facing off against clients from a compliance perspective. But what I really like, and which is really important, you can have all the policies and procedures and controls in place, but what you really need is an underlying culture of compliance. And what I mean by that is people buying in and understanding that they're trying to do the right thing. And when I was interviewing at GSR, I spoke to the founders and I spoke to a number of people from the leadership team, and they had come from traditional finance, and they gave me comfort that they understood that compliance was a critical function at the firm. So that gave me comfort going in that I would have the support and the message from top down that we were going to do the right thing and have a program that would meet the requirements. Now, they're not always requirements or rules or regulations, but I think if you hold yourself to a standard where fraud and manipulation are always problematic and in all likelihood in any jurisdiction illegal, I think that's a baseline. And for GSR, our reputation is critical. So we hold ourselves to a pretty high standard, and I think our primary driver for growth is our reputation and our people, and we do what we can do to educate them and give them a way forward.
So at Crossriver, our ethos is doing well by doing good and doing good by doing well. The US banking system is due for disruption. If you send funds overseas, you're paying 7 percentage points to your local banking institution or to Western Union. If you park your money at a mega center bank, you're earning 0.05 basis points in yield as compared to 3 to 10% or potentially more based on your risk and security tolerance in DeFi. If you're engaged in international remittances, there's a lot of opportunity for crypto to transform. Our thesis is that crypto is FinTech 3.0. Stable coins achieve product market fit. I know the SEC chair earlier said there is a digital dollar. I don't see the digital dollar. If one of you sees a digital dollar, let me know. But you know, we need to move beyond transacting in private walled gardens that are governed by larger big tech companies and move to a decentralized world where consumers have economic sovereignty and control. And we want to be a part of that. From a compliance perspective, we do differentiate on compliance. We want to make sure we comply with the law, but also advocate for financial inclusion and move to a more modern financial system.
I really appreciate the do well by doing good. And we launched the chamber in 2014, which was, you know, pretty early days, especially from a policy perspective. But I felt very convicted that, and back then we had Bitcoin, we had Litecoin, we had this meme coin called Dogecoin. Don't know if you heard of it. It was kind of a joke back then. I think it's still a joke now, but still not sure. But it was a very, very early ecosystem, and we could just see so much potential in this technology on how it could bring real world benefits to huge problems throughout our financial system, things like financial inclusion. And fast forward almost a decade today, and we're still just at the tip of the iceberg on how this technology can really impact real people, real constituents, and change the way we transact and interact. So that do well by do good piece really speaks to me, and I really think more organizations should make that a part of the ethos of how they're approaching their crypto strategies. And then Paul, I also really, appreciate having those monologue conversations with regulators. And, unfortunately, I've experienced that as well, which is honestly baffling as an advocacy association, because we're doing public policy work strictly. We don't have products, we don't have services, we're not trying to push anything through of our own through a regulatory process, and our mission is really to be a resource to our policymakers, and to have those one-sided conversations can be incredibly frustrating. And where we are today, myself, I'm sure all of you all have lots of questions. I think we even have even more questions after today's chat between the SEC chairs, and there's a lot of regulatory uncertainty in the crypto space, whether you're from a trading perspective, a listing perspective, there's a lot of issues to continue to work through. And we're in a global ecosystem. This is a technology that doesn't see borders. It's digital, it's global by nature. And you look around the world, and there's other jurisdictions that are embracing this in a very different way, and businesses and people are able to move forward much quicker. So Ben, I'm just gonna pose this one at you. How do you see this challenge of having this 24/7 market? It's a global market. We have organizations that really want to do the right thing. They want to work with regulators, work in a regulatory confine, but then you see other businesses that are just able to do so much more outside of the US. How do we interpret that from a commercial perspective?
It's a great question, Perianne. I think, first off, look around the room. There's people, there's a good diverse cross-section here of people who have traditional finance, who are, either former regulators or in the digital space, advocacy. I think it's important to also take a step back. Remember, this is not the first market that operates 24/7. The foreign exchange markets are, I believe, $7 trillion today, the largest financial markets in the world, and they operate. So as someone who's been in this field and a practitioner, I would say, I think what concerns me is that if we're not able to function sort of like the foreign exchange markets are, it could lead to problems such as, for example, bifurcated liquidity pools, where we're having one market here in the US, where there's another market in another region of the world. And I think something, an analogy, a real case scenario of how this was solved, if you think back, a lot of my early work was done post-Dodd-Frank, Title VII derivative reform. And if you think about how the swaps market became fragmented, and really we had to patch it sort of with substituted compliance, with equivalency determinations. That is something we need to avoid, I think, in this space. We need to make sure that the markets function orderly and 24/7. I think it's an overarching policy argument, and I'm not hearing a lot about it. I think right now people are more concerned about the term regulatory clarity. I hate saying it, but there is a template for how markets can work on a global basis 24/7 without disrupting innovation in the US. And I think we can look to the past. We heard a lot about that today in different elements with the internet. We can look to the past in certain respects to how to fix what comes next.
Does anybody want to talk about that from your firm's perspective of how you just compete globally with a presence here in the United States?
So GSR has historically been an offshore firm, and I was brought in recently to help build out the US footprint. I think the 24/7 aspect is, from a compliance perspective, are you able to monitor and surveil and have people available on the weekend in the event that something goes awry? We do have coverage, 24/5, but 24/7 opens up a whole nother avenue of opportunities for, I'm not saying anyone's doing anything illicit or illegal at GSR, but if somebody wanted to do something at any firm and there's less people around and they're unsupervised on the weekend, I think that opens up some opportunity and creates additional compliance risks.
Yeah, certainly. Did you want to comment?
Yeah, I'd love to just jump in. I think that, in thinking about competition offshore, and in particular, the opportunity to arbitrage some of the different standards that we're seeing emerge globally, it's at least my perspective that playing the game of regulatory arbitrage may work in the short term, but over the long term, we are going to see convergence. Maybe not perfect alignment, but absolutely we're going to see convergence across a range of standards, and we're already seeing this. I think if you look at any number of topics from, for example, the FATF guidance on travel rule, for example. If you look at some of the standards that have been promulgated regarding politically exposed persons, I could go down the list. There are common requirements that are emerging from market to market that make it less attractive, if it ever was, attractive for beyond the short or medium term, to try to play a game of hopping and skipping and jumping from one jurisdiction to another in order to try to take advantage of that. I think the other reality, right, is that the United States, for all of our challenges, for all of our shortcomings in our current regulatory frameworks, remains an important voice, and I would argue the most important voice in the global conversation around a number of these topics. And so, I think it's incumbent upon all of us, and certainly all of us in this room, to think about how we can continue to promote the standards, the regulatory standards and compliance standards of the United States as a model for other countries to follow. Because these markets remain the most attractive, the most valuable, but also the most inspirational. And I think we shouldn't lose sight of the fact that there's still a role for the United States regulatory system to inspire other countries to adopt standards that work for new innovative industries like crypto.
Yeah, I guess to follow up on that, and it's been said earlier, the US regulatory framework needs an update. The SEC has two mandates. One is investor protection. The emphasis is entirely on that, but also has another objective, which is called capital formation. The size of the crypto industry globally is, call it $2.5 trillion. Andreessen has a $2.5 billion fund. If you add up investment into crypto, call it 10 to 20 billion, we've generated $2.5 trillion in capital formation. That's generated meaningful, life-changing returns for investors that otherwise may not have had the opportunity to access that due to accredited investor rules, which are outdated. Another key idea here, again, is around decentralization. The Securities Act from 1933 and the Exchange Act were built around this premise of a principal and an agent. The principal was the LP that put funds into an investment. The agent, or the GP, carried out the operations in the fund. And the idea was that there's asymmetrical information, so you need to protect and you need to have a disclosure regime. Today, there are decentralized communities on a Discord channel building and launching protocols on chain that run on an algorithmic, decentralized basis. There's no longer an asymmetry between a principal and an agent. The user is also the customer, might also be the developer, and the regulators struggle to account for this new way of how we do business today and how we can empower consumers with that framework.
Yeah, no, those are great perspectives, and of course the international policy making bodies have a big role to play, whether that's the OECD with FATF or what's happening at the Bank for International Settlements with the Basel Committee and IOSCO. What they put out ultimately is going to be implemented all around the world, so there can be a huge impact from the international perspective just by engaging with a couple of key organizations. Building on the theme of decentralization, so as someone who's been in the policy space really since the earliest of days, I feel like as a community we have been victim of PR nightmare after PR nightmare after PR nightmare. And for those who can appreciate the industry back in 2013, which I called the breakout year for Bitcoin, because before that it was really unknown, still very much a part of like this cypherpunk early industry. And the big event of 2013 was when Cyprus was negotiating its bailout with the European Union, and there was all this economic uncertainty, and there was talks of Cyprus even leaving the EU and the European Monetary Union, and people started buying Bitcoin in this time of economic uncertainty, and that's when Bitcoin had its first huge international wave of coverage and got its really first kind of attention from an international news perspective. And so that was interesting, and I thought quite positive, and really the first time we saw Bitcoin used as an alternative monetary system. And then right after that, there were two like not so great things that also got lots of media attention, and that was the collapse of Mt. Gox and then Silk Road. For those who aren't familiar, just Google them. There was lots of coverage, but at the end of the day, what people thought was that Bitcoin had failed. They just, because some people didn't understand everything, they just thought Bitcoin had collapsed. And then they also thought that this was just the currency of choice for criminals. And we are still recovering from that. I mean, we heard Chair Gensler just talk about the ransomware threats. Just mind you, they didn't also state that less than 1% of crypto transactions are linked to illicit activity. So very, very, very small percent. Is that, I mean, not that we don't need to protect against that, but a lot of it is focused on the bad stuff. And so we went through that with Bitcoin, and then we had the whole ICO craze in 2016, 2017 timeframes. And now today, it's DeFi. So, and there's a lot of scrutiny. Of course, there's rug pulls, and there's things none of us that do well by doing good. We all don't see that. But do you all feel like the scrutiny and the criticism specific to DeFi is truly warranted?
No, not entirely. I think, Perianne, you're right to point out that crypto has long had a PR problem in some sense, and there has been a remarkable focus and a sustained focus on important events of the past, but that don't reflect the markets that we're all operating today. I think, though, that the thing that gives me slightly more hope and optimism is that there's an incredible divergence happening right now in the conversation and the characterization of crypto between those that I think are less attuned to what's happening in the market, the actual market, real people doing real things with crypto every day, and what you see and hear and read on Reddit, in Discord channels, among people who are actually active in the space and are very clear-eyed about not only the risks, to be sure, from any type of venture, but the opportunities that crypto provides. And I think that that dichotomy, that gap that is emerging in the perception of the trade-off and balance between risk and reward is an important one. And I think that part of our job as voices in this industry is to give greater weight and to promote what is taking place among the people who are actually engaging with these assets on a daily basis, and what's more generally reported and shared among I think an ever shrinking class of people who don't fundamentally understand what this is all about.
All right, so there's a lot of scrutiny and criticisms. There's big focus, almost a spotlight for those engaging in DeFi. This is obviously the future. Things are being decentralized. Technology and society is moving forward. How do companies prepare for this, or how are you looking at this from a compliance perspective? How should we be preparing? Because there are some conundrums when it comes to regulatory oversight and in the DeFi space.
I think from my perspective, it's ultimately educating yourself and speaking to people and better understanding what the offerings are. This is not, Solidus didn't ask me to say this, but I did reach out to them early on in DeFi and said, how are you guys thinking about it? And we had a number of discussions and dialogue around that. Engaging with law firms. For us at GSR, we're thinking through creating some sort of checklist or risk assessment that can review the risks associated with certain pools. Who are the participants? Are there founders you can do diligence on? Is there wallet screening that you can do from a compliance perspective to identify potential illicit funds? But it is such a new thing, and I think a lot of people are trying to figure it out, and me included.
I think two suggestions. One is call Crossriver. We work with startups all the time to navigate through this process. I might be the only person, not a lawyer on the stage, but we have 6 outside counsel, and I pretend like I'm a lawyer on Twitter. Probably shouldn't. The second thing is hire outside counsel, get a chief compliance officer. If you want to move money, you want to engage in bank-like activities, you're going to touch on regulated activities. So go in with a right, legal mind frame.
I was just going to add, but one other thing that stands out to me, I think this industry, if you look back in the earlier days, it was actually challenging to be a practitioner in the field if you think about it. There's no no guidance, very little to no guidance, no rules. I actually think that I have high hopes for DeFi. I think some of the practitioners and lawyers in the field, I see some in the room here that are specializing in that. I think that they now have, we're seeing the gatekeepers, as we heard today. I think they understand securities laws, they understand commodities laws, they understand banking laws, and I think the law firms are also getting smarter too. It's not I think this is just a fact. Also, any time you would go for advice in the early days, it was unclear, and that's hard to operate, whether you're a trading platform, an over-the-counter operation, or just a DeFi, a piece of software. I think it's difficult, and I have high hopes, as I would say. That I think we're headed in the right direction, and there's a lot of people that are being thoughtful about it, and how the right path forward should be.
Yeah, I'm very optimistic too, and just to give my own advice, and by the way, I'm not a lawyer either, and nothing any of us, but including me, should not be taken as legal advice, opinions only. So my opinion on how firms can prepare for just the future of DeFi and the regulatory considerations around it, especially in a moment where there's a lot of uncertainty, is having very strong disclosures, being very upfront with whether it's your customers or your users, your clients, whomever. Make sure they fully can understand exactly what you're doing, how the system operates, what their risks are, just being very transparent and straightforward, and don't give the regulators a reason to come after you. There is a lot of shady stuff happening. Stand out from that and be very transparent about exactly what you're building. Especially, and they touched on this earlier today, is the spectrum of decentralization. And there's not really, if we asked everybody what's your definition of decentralization, I think we would all say very different things. And there are points of centralization throughout the DeFi world, and those points certainly are in a position where they need to be very upfront about what they're operating, what they have control over. So just to conclude, for the last question, I do feel that we are in just an absolutely critical time for crypto policy. I strongly believe that the issues that we're debating in Washington and other power centers around the world, the answers that come out of these debates are going to set the rules to the road for how businesses can build in this space for decades to come, if not generations. Like, now is the moment to make sure we are working hand in hand with our policymakers to shape that, to ensure we have a legal framework that promotes further development and innovation of this technology, of course in a safe and sound way, but there's a very fine balance between that. And there's a lot of things that we're debating, whether it's DeFi and what the regulatory confines of that looks like. Everything within the SEC's what seems like continuing expanding jurisdiction, the balance with where the CFTC comes in, and I'm really glad we had former chair Giancarlo here to kind of add a little bit of balance between where the SEC and the CFTC's jurisdiction comes in. To tax, we had just an unbelievable summer dealing with tax issues. So many non-tax experts actually getting involved in these discussions was very encouraging to see, to accounting and now stablecoins. So 2022, I think, is going to be a key year. What do you think, and we'll just go down, what is the number one thing you're tracking from a policy perspective, or what do you think is the major market-moving issues that will be determined next year?
We're tracking a lot with your help, Perianne, and many others. I'll leave it to others to call out, the burning issues of the day. I will say, though, that from my perspective, the number one thing I think we need to focus on is insisting upon first principles. But what do I mean by that? First principles include, among other things, notice as to what the standards are that we are to be held accountable. So in whatever regime may be adopted, whether it's with respect to stable coins, whether it's respect to tax reporting, there needs to be clear notice to individual consumers and to industry participants as to what the rules are. We cannot allow this framework to evolve on an ad hoc basis with after-the-fact, post-hoc rationalizations. I think there need to be first principles around equal protection. That is a standard that is applied consistently from party to party and entity to entity in the industry, so that when an upstart is looking at a market and seeing certain products and services being offered, they understand that they have the right to participate in that and to compete to benefit users. And I think fundamentally what we need to have as well as a first principle, and that we're paying very careful attention to, is the notion of due process. The notion that when there are concerns raised, there is a legitimate opportunity to engage with regulators, to address those concerns, and to take feedback in order to address the fundamental concerns that are being raised in the first place. I think if we can at least focus on those elements, those first principles, as these different issues across the landscape get addressed, and I do believe they will be addressed in the next year or two, I think at least we have a chance to strike the right balance, which is all that any of us, I believe, are fundamentally asking for.
So thanks, Paul. I would say an observation, and I'll give a crystal ball prediction too. Those are always fun. The observation I see is, and I agree with what you've said, Paul. I think it's important to work with regulators. That antagonistic approach that we see a lot of the time, it can win you a small battle, a marginal battle, but you won't win the war in the end, regardless of how you view the technology in the future. It's just, I mean, history has a way of repeating itself, and that's a practice. That being said, as someone, a practitioner in the field, I think all of us in this room, it was interesting. We saw Chair Gensler here today, and a lot of other regulators say, come in and register. Well, to me, I would like to know what that means too. I think a lot of us in the room maybe don't even. You have to break it down and unpack it a little bit. Does it mean, if you're a central limit order book, that you should be a national securities exchange? If you're running an over-the-counter trading platform, you would be an alternative trading system or a broker-dealer. I think it's easy to say that, and maybe in some cases it's possible, but the way that the market infrastructure works today, I don't know that this technology comports with the way the traditional financial system is as of today. And that's something I think that industry and regulators can work together on. But if, that's just an observation, and I would say is the largest risk for the industry if we're gonna move towards a registration type of regime. I think we need to know as market participants what that is and really what that means. That to me is something that there should be, no matter where you are in the spectrum, you should be united as an industry and just as, no matter if you're competitors, doesn't matter. It's something that I think needs to be bottomed out. The crystal ball, I do think that we are, and this is a personal belief of mine, we are going to start to see a shift away from, this is a compliance panel, away from traditional AML, CFT, financial principles into more trading practices, market conduct, market surveillance. Someone who's grown up in that. I've always found it's curious to me how trading platforms, the widget, whatever the instrument is you want to call it, everything's all AML. And that's how this, if you think about it, it's how this industry came up and this tech came up. But I think you're going to start to see a lot more around other assets and elements of a compliance program, and that will actually lead to, I think, new opportunities. And you think about, we're here today, Solidus, market surveillance. I mean, we heard it today from two regulators and the keynote, and I think it's something that we are going to see more of in the next year.
Yeah, I wish I can predict the future, but ultimately, regardless of how the regulations shape up, I think you should start putting the foundational pieces together for a compliance program, including policies and procedures, a training plan, surveillance platform, and have those things lined up, because it's only a matter of time. Every regulator globally will expect you to have those fundamental pieces. One of the biggest challenges coming into 2022, and it's not necessarily falling right into compliance, I think the cyber criminal phishing risks, they are so sophisticated now, and they're only going to become more and more sophisticated as we go forward. Requesting wallet information, identity theft. I see it on a daily basis. People's Telegram handles get hacked. I think that is going to continue to become more and more of a risk for people going into 2022.
There's no question that the opportunity ahead is tremendous. I think the DeFi world can benefit substantially through integration with CeFi. DeFi active users, if you look at Dune Analytics or look at your favorite blockchain, is around 350,000 users. Coinbase has 60 million registered users, about 16 million active, 4 million registered on their NFT protocol. And CeFi has distribution and highly usable experiences. Anyone dealing with MetaMask probably knows what I'm talking about, the challenges around it. So, well, what is the challenge legally? Well, one is, are protocol developers that coordinate in a decentralized manner on Discord, can they be held liable for engaging in activity that might be deemed a violation of securities and banking law, right? So that is not clear. Second, if I earn interest from a DeFi lending protocol, I cannot attribute the provider of the interest, is that coming from an OFAC sanctioned party? That limits a bank to engage with the DeFi protocol. I think the third issue is around AML and KYC. We use those terms interchangeably, have been doing that for a few decades now. But I think sometimes we forget AML, anti-money laundering, that's the objective. KYC was the strategy to accomplish the objective. There can be other techniques, and cryptographic technology, like ZK rollups, I'm not going to try to define that, maybe folks here can do that better than me, but there are privacy-preserving techniques that can help banks that have to comply with the KYC regime to validate that a user meets certain identification standards while preserving the privacy of that individual. So there are a lot of issues to address, but we're hopeful for the outlook ahead.
No, that's a great point. And I think as we're thinking about the future of regulation for cryptocurrencies, for the digital asset space, it would be, part of the conversation needs to be, how can we use this technology to accomplish those goals that we all share: investor protections, consumer protections, protecting the financial system, and so on. If we can work this technology into the regulatory discussion more and leverage this technology, I think we'll be in a better spot. And hopefully we can encourage our policymakers to do that. I want to thank each of our speakers for your insights today, and also a huge thanks to the Solidus Labs team for hosting us today. Please join me in thanking our speakers.